So can everyone hear me, please? Can everyone hear me, please?
Yes.
Can everyone hear me?
Yes, man. Amen.
All right. Now, what the topic we would be discussing tonight is called market structure. Guys, to be honest with you, this is the most, if I say this is the most important topic that you should understand. Like, I don't care whether you understand support and resistance or demand and supply or whatever. If you don't understand this, like, you would be lost. You understand? The reason why you see people, they open a buy trade, they are buying and they are selling at the same time, is because they don't know what they are doing. You understand? Now, if you understand this, believe me, your journey of forex. Now, if you can understand and adhere to this, you understand. You see, one thing is for a student to understand, and another thing is for that student to believe and with discipline apply whatever the things is taught. You understand? Like myself, as a new B trader, now undergoing training, then one of my undoing or one of my weakness was indiscipline. You understand? Like I knew too many things that, eventually they began to interfere um, with each others. You understand? So if I had immediately applied everything I was taught by my mentor, believe me, guys, I would have passed this level by now. You understand? So, sticking to discipline, you understand? Even in this course we are doing is very, very important, because it doesn't matter. Even if the best mentor likes, let him teach you. If you are not disciplined, you will still lose your money. That is one thing about this FX. If you are not disciplined, you will still lose money. You understand? If you are not disciplined, you will still lose money. Now, this topic we are going to treat tonight, not every trader out there that calls themselves traders who understands this. You understand? And you understanding this topic is what is going to differentiate you from the 96 or the 95% out there. You understand? There are sometimes some students do ask me, okay, why are you buying now? Like, I tell them, don't worry. If you can only see what I'm seeing, you understand? Or maybe I see them executing certain trade and I want them be careful. You understand? Like one of us now, I don't know whether he's on the webinar now. One of us in the group was selling AUD USD yesterday, and I told him be careful of selling AUD USD because I see it going up. You understand? Like I told him be careful of selling AUD USD because I see it going up. I didn't even check again until this evening while I wanted checking some stuff on the MT4. I stumbled across that AUD USD. Man, it has gone up, like it has made like almost 70 pips move. You understand? Now, I didn't just look at that currency pair and just guessed it that it was going up. You understand? I didn't look at it and guess that it was going up. There was something I saw. There was an understanding I had. So tonight, if you can begin to see things, my objective in this lecture is for you to begin to see the market the same way I view it. You understand? So if you can begin to see the market this way, believe me, guys, like a major of your battle is solved already. Because can we hear me right? Can we hear me?
You create a video.
You can hear me right? Oh, I need to mute everybody. All right. Now, if we can understand this, this is one of the things that would separate us from the 95% out there, guys. You understand? Now, one of the contemplation of an average trader is, what is the market doing? Where is the market going? Or where is it coming from? Now, guys, you see, many of the retail traders, now this is why they fail. They focus so much on this support and resistance stuff. I'm not saying, am I saying it's not important? No, we will still do it. You understand? They focus so much on Fibonacci. Am I saying Fibonacci is not important? No, we will still do it. They focus so much on harmonics patterns. You understand? If I see you guys, if I see that you guys know need harmonic patterns, I would go through it. You understand? It's actually part of my plans to go through it. So, but I'm not fully convinced we'll need it. All right. So it's part of the plans I have for this batch of training anyway. Harmonics patterns and maybe basics of Elliott wave. You understand? So, but at the end of the day, I discovered that the simpler it is, the better the result. You understand? So instead of you draw one line, you draw another one, you say this one is Elliott wave, and according to Elliott wave rule, okay, we'll name this one X, we'll name this one 1, then this is a retracement of 1, then we'll say this one is, then we'll say this is 3, then the retracement of this 3 now must not breach the low of 2. You understand? All those kind of laws will say this one is, okay, this is the impulse move, this is the corrective wave, and all those stuff. Now, eventually, you yourself, you would become confused. You understand? Yourself, you would become confused because there are too many things. And you see, this stuff called trading, but now, the reason when you see the chart of a bank trader, is not messy, like it's as clean as anything you can think of. But as you see that clean, it has many important details on it. You understand? A bank trader knows from where he would begin to sell, and he knows from where he would begin to buy. So, and these are the things that differentiate them from an ordinary retail trader. So when you are now thinking of which one is corrective wave, then I'll say, okay, this one is wave 4. You understand? I've counted wave 1, 2, 3. This one is wave 4. Then after wave 4, then wave 5. Then after wave 5, we have impulse correction of 1, 2, 3, or A, B, and C. You understand? All those things, eventually you will become confused. You understand? Now, I have many friends. I have many friends who trade Elliott wave. You understand? I have many friends who trade Elliott waves. Now, eventually, most of them become confused, and what you see them do is that they pick a simple pattern. You understand? They pick a simple pattern by which they stick to. Now, for those of us, I may surprise us. I may surprise us to tell us that our normal head and shoulder pattern, it's an Elliott wave pattern. You understand? Like, you know, all those stuff, they works. You understand? But the simpler it is, the better the result. You understand, guys? So that is the reason why guys, let me shock you. An Elliott wave trader who doesn't know this, he's wasting his time. You understand? Because what you trade in Elliott wave is called the corrective and the impulse structures. You understand? So which means let me give an example. Let me give an example. Where is this stuff? Okay, let me clear everything now. Now, which means, let's say this is a wave, okay? This is a wave A, okay? Or let's name it wave 1. inside this wave one, you would have something like this. You understand? You would have something like this. Then they would begin to count, okay, this one is A, B, then C, D, then E, then boom. This one is they move to the upside. Now, these things are, and then they would call this one the major structures or the impulse structures. Then this one is the corrective. You understand all those stuff. Now, these are the market structures they are dealing with. You understand? But Elliott wave traders, am I against Elliott wave? No. You understand? But I'm just giving my unbiased opinion. You understand about how complex Elliott wave traders has made these things. Myself, I know Elliott wave, but I don't trade with it. You understand? I don't trade with it. A point came that, like, it was like I had overload of information. You understand? I have overload of information. Like, so that's why even if you learn the whole Elliott wave stuff, now you know Quasimodo. Now, as many of us who are used to or who are a bit knowledgeable in Elliott wave, we would understand that Quasimodo is a type of Elliott wave. You understand Quasimodo, then, or let's say you understand the ICT inner cycle concept. You understand all these, all those peak and beakers, and all those Judas swing and all those stuff. You understand? Like, if you know those stuff and you don't know market structures, guys, you are wasting your time. Okay, so now the importance of these market structures is that from the moment you are able to read your market structures, now what it gives you is clarity of views. So it means you know where the market is coming from and you know where it is going. Now, I think, Manasseh, if you remember, I was talking about AUD USD when you were selling it yesterday, okay? And yes, I said that be careful selling it because I see it going up. You understand? Now, I was reading the market structures on the 4 hours level on that AUD USD. Now, that pair being at the market structures level, I knew it wasn't just a support level, it was a market structures level. I knew AUD USD, I knew it was going up already. Then at another time, at another time, I wanted jumping on the trade. Sorry, I wanted
that point I was like, I could not just finish the ball for that game. So
I wanted boarding the trade, but I looked at this. I said, no, it has gone far already. You understand? And I was shocked where it went to when I was checking it this evening. You understand? So when you understand these market structures, like 30 or 40% of your work as a forex trader is done. You understand? Because you can look at a chart and know where it is going. And guys, this is the contemplation of every trader out there. Like, what is the market trying to do? You understand? I remember at a point where I would be scared of, of opening an order because I didn't know where the market was going. Like, I was like, okay, what if, you see, guys, there was a point that whenever I open a sell trade, the market would begin to buy. And whenever I open a buy trade, it will start selling. So at the point, I was like, man, this thing, could it be a scam? Like, why would these people, it's as if they are watching me. The moment I open a position, it will start going against me. And the moment I close it, it would start going the other way. You understand? I was like a confused trader. At a point, okay, I would be like, okay, when I open buy and it starts going against me, I will open sell. In fact, that is the worst, that is the worst state of confusion a trader can be. You understand? that you open a buy and a sell at the same time. You understand? Now, a robot can do that because it has no emotions and it would handle and manage everything well. But a human being can't do that. You understand? And guys, you see, one of the things that affects our trading accuracy is our emotions. You understand? So the moment you open a buy and a sell, you are confused. Like if the market is going up, you are scared because you have a sell position, and if it's going down, you are scared because you have a buy position. You understand? So you are wondering, which one should I exit? Which one should I leave? You understand? So, but an understanding of market structures, it will clear all those doubts and confusion. So you can literally look at a chart and know that this chart, oh sorry guys, let me you understand? So you can literally look at a chart and knows where the price is going. You understand? On that asset. You understand? So now, what is market? Oh, who is calling now? Oh, he knows he's supposed to be part of this webinar. He knows I should be having class now. Why is he calling now? Can we hear me, please? This internet has disconnected. Oh. Can we hear me, please? Hello, can we all hear me, please?
Yes, sir, we can hear you.
I'm sorry, I'm using my phone for the connection, and then someone just called me. He's supposed to be part of this class. I don't know why he's calling. Okay. So now, guys, so what I was saying is now this market, okay, this market, it's an organized structures. You understand? It's an organized system. Sorry. And within these systems are structures of movement. So which means, like, you cannot look at this market like, you know, you can't look at it like it's one very, very overwhelming stuff. Like, you just look at everything and you are confused. Like, you are wondering, where on earth is this price going? You understand? Where it is now, what does it even want to do? You understand? So, but this evening, the answer to that question is the reason why we want to learn this particular topic. You understand? So, which means as soon as you understand these structures, you understand about how the market moves, you will no longer become a confused trader. You won't any longer be a confused trader. You understand? So you will know the intention of the market. So this market structure, in a simple term, it is reading the direction or the trend of the market. You understand? So when I say trend, I mean the direction of the market. So those are terms we've explained in the basics already. So it means whether I should be selling or I should be buying on a particular pair. You understand? So which means I can look at a GBP pair or any pair, for instance, and I know this market, I have a 70 to 90% accuracy on it, that this market, that this market, it should be from here, it should be going down. You understand? And 70 to 90%, and I would be correct. You understand? Now, it is not guesswork. It's what I want us to know. This thing can be learned. You understand? You can understand the market like the back of your hand. Now, I have a student, that guy trades, which pair is that? Is it UJ or, but it's one JPY pair. That guy understands that pair like the back of his hand. You understand? Now, that was the guy that I was telling you guys that he took, that I was telling you guys that he took his $3,600 account to over 50,000 USD now. He trades a single pair. He understands that particular currency pair like the back of his hand. So you see him sometimes, he's on a 1,000 USD account or a 3,000 USD account, but the kind of lot size he's using, man, is heavy. You understand? And he has been doing this for months. Like, it's not about luck. Like, okay, maybe he's been lucky in, you see, if you trade consistently for a month, you will understand that there is nothing like luck. And okay, even if there was luck in 1 month, if you trade consistently for 6 weeks, maximum 8 weeks, you will understand that there is nothing like luck in this market. Because you see, there is no market phase, especially if you are an intraday and a scalper. Now, for a scalper, if you trade the market consistently for 2 weeks, if you can be consistent with a particular strategy for 2 weeks, you will master it. I know it's shocking many of you, like I say 2 weeks, and you are imagining 2 weeks. Yes, if you are a scalper and you trade on, let's say, like the 5 minutes time frames and the 15 minutes time frames, and maybe for guys like us that sometimes I do trade on 1 minute time frame too. And I'm not talking about any moving average or I'm talking about pure price action. It's just the chart alone, nothing on it. You understand? I trade 1 minute sometimes. And you know, if you trade the 1 minute chart, and you do it for a week, if you can consistently do it for a week, or let me just say 2 weeks, you will master that. Because this market has phases and patterns, and at every point, these patterns, they repeat themselves. So if you were able to overcome some of those patterns, are really difficult to trade through. So if you are able to successfully trade through them, believe me, guys, when you see the next time, now it sticks to your brain. It's psychological. It sticks to you. It sticks to your mind. So when you see it, you know, this is what the market did last time. Even though you are not predicting it that it may 100% do so, but you follow the price. You understand? Like, you already have like a targeted and expected outcome already, what you want this market to do. So as soon as it start doing that, like, you start smiling. You understand? So at that point, you become a trader. You are no longer gambling. All right? So, and if you can consistently trade the 5 minutes and the 15 minutes chart, like, you don't change it to any other time frame. If you can consistently do it for a month, you will master it. And guys, when it comes to reading the market, now I have discovered this over time, and not only not myself only, but several other mentors that I learned from. You understand? Now, they do say, if you trade a particular time frame without changing it, and you can do it for maximum 8 weeks, you understand? If you can do it for 8 weeks, it will master you, and you will master it. So it means if you choose to be trading with M15, don't change. Now, this thing that I'm saying already, like, I'm not only delivering to us a lecture on how to read the trend of the market. Now, this thing may be a breakthrough for some of us who are beginning to trade already. And for some of us who are on live account, or for some who are on them already, this thing may be a breakthrough. Now, when you trade a particular time frame consistently without changing it, now you become a master over that time frame. You understand? Now, price doesn't behave the same on every time frame. So if you are a daily time frame trader, for instance, there are patterns, there are ways that a daily candle behaves that over time you can study it and master it. If you are a 15-minute trader, like you are executing your orders on N15, if you can do it, I know this thing is one of the most difficult part of trading. Like I know some of you are asking in your mind, like, how do you expect me to trade? Like I trade for a month on a particular time frame. Is it even possible? Guys, it's possible. It's possible. And this is the secret of the top of the few, professionals. You understand, the few 4 to 5%. This is their secret. So now the reason why when you are developing a robot, for instance, the reason why that robot can tend to perform more than ourselves, a human being, it is true that it's us who programs robots. But you see, that robot doesn't have emotion, so it cannot be biased. You understand? So a robot trades on a single time frame. So every time it's approaching its entries and exits, it's on that single time frame. So eventually, like if you program a strategy and you trade it like that, now you will discover that the robot would have an accuracy, you understand, that yourself as a human being can't match. You understand? Because the robot is not undisciplined, is not indisciplined. So when you place it to be trading on a 5-minute time frame, it keeps on placing trades on that 5-minute time frame and exiting. It doesn't change itself to a 30-minute time frame. So, and this is one of the secrets why you see those robots, they tend to be better than us. You understand? And you see, when you see guys who trades in the banks, now guys, their entry time frame is always 1, and the analysis time frame is always 1. I know, okay, the question going through many of our minds now is, what if you are doing how do we call it? What if you are doing a multi-time frame analysis? Now, I would come to that. You understand? Okay, we have less than a minute to go now. So I would share the link so that we would join again, okay? So it's less than a minute. Let's see, less than 1 minute. Okay, so let me just end this and share the link again. So it will soon cut.